Hi everyone, excuse me, Stuart here again, and we've got to Wednesday, middle of the week, 23rd of April. Happy St. George's Day for all of you that are celebrating, patron saint of England, famously. He was a Turkish guy, I think, wasn't he? But anyway, of Turkish heritage anyway. And to all my friends in Cyprus and beyond, happy name day, all my friends, George, Georgina, Yorgo. Hope you're having a great day. Stay well, everyone. Crypto, Bitcoin gone ballistic on softening of rhetoric and risk on really across all markets, save the dollar, on a softening of the rhetoric between China and the US. Trump's also cooled on his threat to get rid of Powell. Actually, you can't physically do that, I don't believe. But anyway, the rhetoric's cooled somewhat. So we've got a bit of a risk on rallies. You can see here, excuse me, cup of tea. It's 2:30 here in England. Oh, it's nothing quite like a cup of tea. I do like my coffee, but there's nothing quite like a cup of tea. So yeah, strong 3-day rally. As I said yesterday, can you hear me? I'm not sure you can. Actually, this is working very well. Yes, it sounds like it is. Let me check. Checked earlier. I always check before we go live, but you know, sometimes the actual mechanism of going live messes things up. So you can see here on the daily chart for Bitcoin, lovely consolidation here for best part of 2 weeks. So first day here, we went over the 50-day moving out. Then we just went sideways here from the 12th of April. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 9 days sideways. All supported and above, as we said, over these 9 days, supported by the 20-day moving average. Half of the 9 days, we then went above the 50-day moving average, went in to test it here ahead of Easter. Off again here on the 19th. Interesting, a weak candle there over the Easter holidays, but a big breakout on the 21st on Monday. Tuesday was the big breakthrough. We went into this through the 200-day moving average, through this is a key Fibonacci level on the daily timer. This is the 38.2. And then today we've rocketed again. We're currently trading at 94,200. If you want to buy this on our platform, there's a bit of a spread there, but that's the nature of the markets, obviously. But through this next key fib level, the 50% key fib level, and then what precedes it, or what's ahead of us, is obviously the 100,000 level, which everybody's chatting about, especially in our Discord group. The guys are getting quite excited about 100,000. But before we get there, we've got to get through this key golden ratio on this fib level, the 61.8 golden ratio on our Fibonacci retracement here, which sits at 95,870. Is the next upside target for bulls here on crypto. Obviously, crypto can move, and Bitcoin, being its leading proponent, can move very quickly, very exponentially, and that's what we've seen in the last 3 days. Strong candle pattern. For me, it's a bit too steep, that rally, but who cares? You know, if you've been long from the break over the 20-day moving average, which really happened back here on the 11th of April, 11th, 10th of April, some key dates for our trading account for April. Because the following day we brought the 50-day moving average for the first time in a long time. Look at this, long time, all the way back here to February, before we were last above the 50-day moving average on an end-of-day basis, and that was only for 1 day as we turned around very quickly. And then February, March, we went down, testing these 75,000 lows at the beginning of April. But what a turnaround we've had, and we've still yet to have any comment about from the obviously the Trump administration with regard to the crypto situation. There's been no statements around that, either positive or negative, for a long time. So big old rally through the key resistance level, that 200-day resistance, and the fib level, the 38, was what we talked about the day before yesterday. Big old rally yesterday, and following through today. So next target, my friends, before we get to 100,000, is 97,700 for crypto. So Bitcoin moving up. Oh, sorry, let's make the chart a bit smaller. But just before we go off that, you can see, hopefully, you know, RSI still rising nicely here. Technically, we're at 67.50. We're far from, well, not far from, but we're yet to breach the overbought area. And again, we, you know, briefly overbought all the way back in last year. We haven't been overbought. Crypto this year. We have been oversold here at the end of February, but we did go lower after that. So it's all looking quite positive technically as well. The MACD, certainly over the last 3 days, obviously we've had a cross back here again, the 11th of February. Another tick in the box technically, and everybody's these technical indicators are old-fashioned and out of date, but they've kept me in the money and stopped me from losing lots of money over the years. But there we go. So key break was that 11th of April rally. Nice consolidation in 9 days, and then the breakout here on the 21st. And here we are, St. George's Day, 93,500, 93,700 if you want to buy this. Currently, so Bitcoin rallying, risk on, as we see this cooling of rhetoric between China and the US in particular. We're also in the, let's just go through these as we go down. We're also in the middle of earnings season. Tesla shares rallying this morning in after hours trading, even though that was quite a weak, or very weak, I'd argue, earnings numbers last night. But all eyes on that. It's really Tesla is rallying in pre-market on the news that which seems to be confirmed. It's not officially confirmed that Musk will step down from Doge in May. He always talked about May. You remember he talked about these 200 days, these 100 days. We're going to save 200. What was it? 2 billion in savings in 100 days, and that was 100 days are up towards the end of May. So he's talking about moving away from Doge and refocusing on Tesla. I mean, they're getting caught. Tesla as a company getting caught from all sorts of angles. Obviously, the tariffs are having a big impact on them. Will have a big impact on them from a manufacturing point of view. The refreshing of their product line hasn't happened really. It's still getting pushed out. All sorts of questions around the robotaxi, the Model Y, the Series 3 was received pretty poorly, and then we've got this massive ramp up in the Chinese manufacturers taking certainly hanging on to and expanding their global presence, taking off really aggressively here in Europe. BYD in particular used to know me. I was looking at a model from them yesterday, and all sorts of other brands as well moving into Europe and obviously North America as well to an extent. So the future is electric, certainly, but drill, 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 baby, is the mantra of the Trump administration. Still pumping those fossil fuels. So yeah, Tesla very much under pressure. Some sell buys, sell recommendations from some analysts on Tesla as well for the first time in a long time. So yeah, very much under pressure. But anyway, let's just run through. Oil, 63.80 this morning, rallying, and again another one that can't break, or not another one, but another one that's been sort of playing with a key resistance area. This time it's the 50-period fib level and the key 21-day moving average. We've been pushing towards the 21 EMA here for 4 days. We've been over it again this morning in early trades. If we look at just watch, that's the 50-day, but if we come down the hour, sorry, the 20-day moving average, the hourly chart, we were quite positive in trades yesterday. We rallied and rallied, and we moved to $65, but we couldn't hold it and turned around quite quickly this morning, and we've been down all day into the 50-hour moving average today. But overall, we are still sort of bid, but we've yet to break out of this 20-day and the 50 fib level around the $64, $65 resistance area. Next upside, if that breaks, will be this fib here at 65.90 to the upside. But again, you see nicely supported, a little trend line would support this move up. We've got a bit of compression coming up here after these two big down days, one big up day, and then we're drifted higher. But we need to break this 21-day EMA here, which currently sits today as we've come down to 64.30. So oil somewhat bid. We got inventories later on today. We had official inventories, private inventories last night. In fact, no, it's tomorrow, isn't it? Because of the holiday, I think. I'm going to have to double check that. Don't trade oil as much as I used to. Dollar remains pressured to the downside, but let's just finish. Let me just move me a bit later. We'll come back to the dollar. Let's just go back to this. Actually, let's just show you the euro 113.90. So we're giving away that 114 area and 115 as we were earlier in the week. So it's a bit of an improvement in the dollar, given this wasn't going to run forever, obviously. So we went to 115 and we're down. Some interest in the dollar with the cooling of the rhetoric in particular on both sides. We've got Trump cooling with China. We've got Musk moving back to Tesla and Doge. Trump also backtracking on his comments around Powell, as I said earlier, whether he's actually got the authority to actually sack him or not. It's questionable, but he can put an awful lot of pressure on the independent Federal Reserve, being the character that he is. So, Mr. President Donald Trump. So the main reason we're here today is the main data announcement today. If we just bring this back down to the 15-minute chart, you can see we've got a cooling euro dollar today. A low as this we've been into 13. The big round number 13.05 is where our stop loss from a previous trade when it is. Got back to 1400 again today, but just sort of rotating through it over the European session this morning. So we've had a high this morning at 9:15. It took us to 1430 or 1440, say for the sake of round numbers, and a low this morning around about what's this? This is small. In fact, it was lower than that was. Yeah, actually, no, you were. This was last night. It was last night, wasn't it? Before the market. So we've really Asian trade's been around that 1370. So that's our range for the day. We'll see if the data moves it. Data today has been pretty poor as far as the PMIs are concerned. Remember the significance of the PMIs. They are forward-looking and therefore they become quite key. The Australian ones have disappeared off here for some reason. We had Aussie ones overnight, but they're not on our calendar for some reason. Anyway, in Europe, pretty mixed bag, pretty negative bag, and unfortunately, we've slipped back into a contraction zone where we were teetering in the expansion zone. Remember, with the PMI numbers, anything over 50 is a sector in expansion. Anything under 50 is a sector in contraction. Contraction means potential recession. These are preliminary readings for April. The announcements, the trade tariff came into effect the 2nd of April. So these are starting to, this is now Trump data. There's no question about that now. So Germany, the engine room, or for many, many years, the engine room of Europe, of the EU, manufacturing came in, PMI manufacturing, you see here, not slipped greatly and better than expected, but 48 we're still in negative territory, and it's been, woeful. The more concerning number is the services sector slipping to under 49 from 50.9 to 48.8. That's 2 ticks down. That's a 4%, near 4% decline in 1 month. That's not great, but it just suggests that perhaps the cooling, this continuing talk about disinflation and cooling of inflation in the EU area will continue. That will continue to push the ECB in a direction of trying to support the economy, so cutting rates potentially as well, which is why we've seen that cooling of the euro dollar today. So Germany weaker than expected. The other big engine room of the EU, obviously France, 46.9 for the services from 47.9, worse than expected, and again a better than expected manufacturing number, but also still in contraction. In Germany and France. Overall, Eurozone, the composite remained just about as close as it could be in as far as an expansive mode. But again, it's missed expectation. And that's quite a significant, again, as a composite number, it's quite a significant move down from 50.9 to 50.1.8 of 1% down there. And then the services actually, you can see, slipped back into contraction. Not great. News there. And then across the old English Channel in London this morning, we've had composites of 48.2, quite a very, well, quite not quite, but a very significant decline from 51.15 last time. And the services number back from 52.5. The driving, remember, financial services in UK, particularly out of London and Edinburgh, less so, very, very significant contributor to UK GDP, but services PMIs 48.9 in actual contraction, composite in contraction from expansion, and the manufacturing worse than expected at 44 from 44.9 last month, in line with expectations. So overall, a very negative. Yeah, very. I believe the very in there. Negative reading for European and UK PMIs this morning. The other thing that weighed on the UK this morning, I don't know if it's actually on this here, is the borrowing numbers. It's not actually on that calendar. It's just it's on this Forex Factory Canada. The borrowing numbers. Sorry, I've been prattling on and I've missed the US numbers. So we'll come to that in a minute. But yeah, sorry, let me just go back to the what's the what's the new? What's it disappeared? What's it disappeared? Anyway, the borrowing in the UK was much worse than expected. It came in at 16.4 billion pounds compared to 12.3 billion last month, and 15.4 billion was expected. So that's weird on sterling and the FTSE this morning. So the data we were here for, my friends, US manufacturing. Again, it's come in just about in expansive mode. So again, the US is sort of hanging on there, leading Europe and the UK, but not greatly, is it? Big surprise is the decline. That's quite a significant decline at 51.4 for the services number from 54.4, and manufacturing actually revised higher last month from 49.8 to 50.2, and similar revision in services, only up 1.1 of one tick at 54.4 from 54.3. But that's quite a significant decline for services. Obviously, the tariffs is now, or the worry about tariffs, the sentiment about tariffs, it's actually starting to bite. And the PMI data, remember, these are Purchasing Managers Index. Remember what PMI stands for. These are guys that are buying stuff, ladies that are buying stuff for companies, whether they're manufacturers or services sector, looking forward to where our inventories are, what wholesalers we're using, where do we get stock from. So supply chains again in question, given what's going on, and the rhetoric hasn't helped up until this point. So weaker data. So the data starting to weaken, I would argue. Lots of people have been saying, sentiment data has fallen off a cliff, but the hard data is holding up. We had this last time. We talk the bulls will say, we talk ourselves into a recession, wherever we are in the world sometimes, and that is the case. It's too much navel gazing sometimes, but the data is certainly starting to cool. Will it continue to decline quite significantly, or will, as the president continues to say, these tariffs are going to, pay for everything? We won't need to have income tax, is what he's talked about. But anyway, we say all that pans out. We're interested to see what the new home sales data is like in 10 minutes time as well. So we'll have a look at that. This is still very, very strong. I don't know if you can see that there. You can't because my head's in the way. If I move that up, you might be able to there. If you can see the new home sales data there, 648,000 from 678,000. Anything over 580,000 was always, pre-COVID was always my sort of line in the sand for new home sales. So new home sales still looking really quite positive in the United States, and that's it's a good indicator of how people are feeling. New built homes means new mortgages, so those with jobs, earnings continue to hold up, and jobs remain very tight. So people are still looking for new homes, but we'll see what that number looks like. If we look at the chart, you see it's cooled off a wee bit, but last few months it's started to recover again from these peaks we had during the summer. Again, it's quite a cyclical business, obviously, new homes. So October high took us to over 700,000 again, and we're down a tad, but it's still relatively holding up quite well. So that data is still quite solid. So we'll see what that looks like in half an hour, not a half an hour, in 10 minutes. Okay, so let's go back to the charts. So see how the euros responded to that. Dollars picked up, as you might have expected, and we've certainly given up that 114 handle. So for euro traders, my friends, as that data is now 5 minutes old, we've got the 5-minute chart. Our low of the day has been, our low of the European session certainly been taken out, so then we've gone lower again. So we are currently just above the last resistance area there at 113.45 is the next downside area. Put this on the 5-minute chart. Remember, this is just 5-minute chart. That's a little resistance area through there. You can see that, our little support area there at 13.45, and we change that to a -9, and then the low of the day overnight was down here 13.10. In fact, we went to 13.08, didn't we? So more or less where our, let's just move that stop loss. That's our low of the day down there at 13.08 to the downside. So they're the next two downside targets. Upside target, if we're going to recover from this, needs to break back over that 200 period moving average here, and for you 5-minute traders at 113.90. So that's your upside line in the sand. Let's make that a little horizontal ray. That's our upside target. We make that a different color. You can see that runs through there where the 200 is. There we are. Through there, we make that a different color. So can't see that. Well, you wouldn't see that on the white background. Put the pink line on. There we are. So our pink line is our upside target. Our purple line is our downside target for the euro. Following that dead, see what new home sales looks like. I say in a few minutes. But dollar's been, it remains, which up to the higher time frame. As I said, we had our peak yesterday when we went through 115, and today we were lower yesterday as the stock markets rallied, and we're lower again today. Sorry, not it was Monday, wasn't it? We peaked at this 115 zone. We had another go at it again yesterday morning before we moved down and under the 200-hour, and then bounced a wee bit, and then we're down again on the data this morning. So dollar seeing some buys at long last. So from yesterday's, when we were all around those round numbers, Aussie is at 160.64. We're still holding it. So Aussie is holding up against the dollar. So again, we're consolidating above 64. And this is our 63 zone, 63.33 area, which had been a key area the end of last year. But we're holding over 64 for the Aussie CAD. Dollar CAD 113.50, 138.50, I should say. So again, another one here you can see on the hourly chart, so bobbing along in this consolidation zone. So again, the 200-hour moving average coming into play again, 138.62 to the upside. Dollar's had a good afternoon from this low into the 138 again. So support, so triple bottom. Bit of gaps between, but still range bound. So break out of this range, which is where we've been, which we are currently above that 138.46, so under the 138.50 area. But the big resistance is the 200-hour moving average, which you can see there at 138.62 is the if you've been buying this all morning, that might be an area to cash in your profits today. If not, stay with it. Hourly chart looking quite positive. Interestingly, the MACD crossed in the last hour. We're over that's a key, trending. Although they're flat, those moving average, it's not trending at all, is it? We're looking at consolidation there. Sideways action, mean reverting type trades. So again, some sellers might be looking to short that if we get to the 200-hour. Indeed, they might be trying to short it now, but wait till the data's out in 5 minutes, see what to do with that dollar CAD position. But you can see that's a relatively positive MACD hourly cross moving up, just like that one there with the lines crossing there, the MACD and the signal line crossing. Actually after there, but you didn't get, got a couple more hours lower. Now we've gone back up. Are we going to move up? But that's your big line in the sand for dollar CAD. Swissy 82.50. It's come back quite aggressively against the Swiss franc. The dollar. If we go up to the the daily time frames, we went into this 81 support level, which we were talking about last week and earlier this week. Again, you see this consolidation zone. Last of the sellers was there on Monday. We took a new low at 80.30, and now we've rallied yesterday. Big engulfing candle yesterday, and we followed positive again today. We're at the top of the range we've been in after this big move down on the 10th and the 3rd of April. So we're recovering some of our April losses, but we're still very much out of the, well, you're still short basically. The 20-day moving average there, it's at just shy of 80.84 now, 83.90 for Swissy. So dollar coming back against the Swissy quite significantly today. Dollar yen 142.50. The down trek, a bit like the Swiss franc, remains in place. We went to test 140, as we were saying yesterday. Big round numbers I posted up on Discord yesterday, very much in play. 140 was the key one for dollar yen, which we went and tested. We found buys down there again. And we're up again today, but again, it's all, it's not of significant. Well, at least if you bought it down at these just above 140 yesterday, well done. But we're still very much in a downtrend in the higher time frames. If we just bring this down to the hourly time frame, we've had a good rally from yesterday, peaked out, and we're moving up. So we like to make a new high above yesterday's resistance 140, which took us to 143 again yesterday before we gave up the ghost, but we're now back up here. Currently a very strong candle, MACD and the signal line about to cross, positive turn up for the RSI there. So a holding of the 200 hour would be nicely positive going into the US cash session, or the stock market cash session this afternoon. Kiwi 59.85. So we've given up the round number we were talking about earlier in the week of .60, but again we've had a really good run, haven't we? We took a lot of pips out of that. Could have kept going, but there we go. Our last was here. It's our last profit. I mean, it's gone higher to .60, but still holding up. So the Aussie and the Kiwi still holding up. CAD still holding up. So the commodity currency still holding up quite well against the dollar. Yen and euro have turned around, sterling's turned around, and sterling 132.92. So we went to 134 on Monday, and again yesterday before we moved down, and again another one has gone down to test its 200-hour moving average before we found buyers. This was that this morning or yesterday. It was into close yesterday, wasn't it? But we're still holding what was a previous resistance area at 132. Now support, but here our support now is the 132.55 area where the 200-hour is, but this is negative for the day. Certainly the 20-hour crossing the 50-hour and moving down. We're out of sync. We got the 50, 20, 200. That's not, that's the end of this rally up by the looks of things, but maybe a bit too early to tell. We did get a bit high too quick. So yeah, finally we've seen some interest in people buying the US dollar. A minute to go, so let's try and not miss the new home sales data. Lots of central bank chatter this week as well today. Wallace was on earlier from the Fed. Obviously, we've had Miss Lagarde a couple of times this week as well in Europe, and Andrew Bailey is due to speak this afternoon in London. I'm not sure he's actually on here. I'm saying it's London. Let's double check. Bailey speaks. No, it's actually in Washington. Of course, what am I talking about? The IMF a meeting, the IFF or the IIF members. It's the third day of their meeting, and Bailey due to speak in a moderated discussion, as it says there, in Washington this afternoon. It says 6:15 my time. It says 6:30 on the other calendar, doesn't it? But anyway, sterling, for what it's worth, as we just said, support the 200 hour. Support the 200 hour at 132.55 today. Resistance, if we're going to start to move back up, 133.10, so above the key 133 level is resistance, and the 50 hour is there at 133.40, 133.50 for cable pound against the US dollar. Any questions, anybody? Can't see anything. Don't be afraid to ask, my friends. We won't bite you. So let's have a quick look at New home sales very strong. That's a bit of a fly in the ointment. Well, again, it could be related to obviously front running the tariffs, but that's a very significant number, 724. If we look at the calendar, you see, sorry, the graph here on Forex Factory, you'll see, as we did before, it's back up, so it's the best in 2 or 3 months. Taking out the January number, it's the best for 1, 2, 3, 4, 5. 5 months since that October number. So nice. In fact, it is, isn't it? Because it's the actual number. The brown is the number. The blue is the expectation. So yeah, good numbers there from new home sales in the US. That'll the administration will like that. Previous month is in line, isn't it? Yeah, a little bit tweaked down. So better than expected. So we come in at 224 compared to 684. So it's a clear 40,000 better than expected. See what pending home sales and existing home sales are like, the data later on in the week as well. So pretty solid new home sales with the mixed PMI data. So the services number slipping quite significantly, sort of lifting the dollar on expectations that the Fed may have to act after all. Sorry, may have to act because of the data, regardless of this transitory nature of inflation, as Mr. Powell is trying to insist. But new home sales at 724,000, that flies in the face of that, doesn't it? If people are looking at all the new home sales are being built and sold, we'll see what say pending home sales are like later on. But we just have a look at the euro again. We go back to our 5-minute chart. Those are the areas we were talking about. So new low of the day was no, it wasn't pushed in, was it? No, we'd already gone through this area, hadn't we? This that was, in fact, that was our next target, wasn't it? So we'd gone through there, and that looks like as the data's come out better than expected, putting more expectations on perhaps they don't need to act if people are still, new home sales are still very strong. So again, data is holding up again, you could argue, certainly in the housing, and obviously housing data is a key component of household incomes and how people are feeling with regard to their future. So yeah, that's relatively positive. So that's the dollar. Indices have been on a rip over the last couple of days. We just go back to the daily chart here on the there we are. Remember, we were short here from Thursday. I don't know where the horizontal line's gone. On the 16th here. And we again, remember I put on I didn't actually have a stop loss. Sorry, not a stop loss. Didn't have a target. I said there was no target, but later on in the day we'd put these sorts of question mark targets, which we'd hit on the downward move on Friday, and then went lower again on Monday before returning yesterday, and then a big rally overnight. It's taken us back to our entry and our stop loss. So that closed flat. We had a winning trade on the US 30. I can't remember what it was now. Earlier in the week. Anyway, half of it was a winner. The second half was flat because we'd moved the stop loss down to entry. The S&P 500, similar pattern, except with our stop loss was a little bit. I didn't get too aggressive. I didn't bring it right down to entry. I'd left it there at 4,340, I think it was, wasn't it, yesterday? But smashed through that yesterday. So we got a big bounce yesterday, and also a positive rally today. Interestingly, and of note, we are now back through the 20-day moving average at the moment as things stand here on this chart. The live markets are currently, I'll see what the futures are looking like on there, but we certainly looks like we've got a bounce from this 5,000 level and this Trump tariff law panic of 4,800 we are currently up. So again, that was our initial steep trend line. We would have had one there through that one, and it's broken that. So we're looking a bit more sanguine as far as the trend line is concerned. Trend line here. here on these end of day. So it's, you know, it's much flatter and therefore much more perhaps if you move it from there to about there, I want to go. There we are. So you should never cut that with a trend line. You should never cut the candle. So move it from there to there. If we put it on the actual those tails, makes it even flatter. But you know, that's your first upside trend line, and then obviously for the S&P 500, that brings in the key 5,500 level as well. So 2 strong days. Obviously today's far from over, so too early to call. But so some of the data's been. Some of the earnings numbers have been coming out. Boeing had a nice rally yesterday. Meta and Apple, although hit by fines from the EU, not as big as many were expecting. And that's obviously lifted their shares pre-market as well. Obviously, the potential deal with Japan, potential deal with India has lifted the morale. The rhetoric's cooled a wee bit against China. But, you know, as we said yesterday, there was still tariffs of 3,500% on some solar imports. So it's far from cooling. It's just today things are a bit less crazy in the Oval Office, perhaps. But we shall see. You know, China's major player. So anyway, stocks rallying. What I'll be watching later as can we hold this 20-day moving average? It's similar for all the other major stock markets. Nasdaq has bounced significantly, also over its 20-day moving average. Remember that it's been more exaggerated with the Nasdaq. This huge bounce we had here on the 9th. Then cooling, we couldn't break the 20, and now we are back over the 20-day moving average currently. And again, I might as well just stick a little trend line on that one through there, and that's our daily trend line. One of the worst draws of trend lines in technical analysis. But so far we are up. Dow Jones is up 2.68%. S&P 500 is up 3% today, 160 points. 1,000 points up for the Dow, 3.8% for the wider Nasdaq, 16,900, and the Russell 2,000, the smaller cap companies, up at 4%. General Motors up 4.2%, Tesla up 3.9%, and Ford up 2.6% at the moment. So those Tesla numbers, although pretty poor for the first quarter, you know, automotives up quite significantly on the back of that news. And I can't keep up with all the others. I know Verizon yesterday had poor numbers. I'm not sure how they finished today, but anyway, sorry, just leave that in there. Stocks remain bid. So Nasdaq up, S&P. We may as well just complete the set and put our little trend line on the S&P. There we are, flatter one there for the Dow. So we go up 2 or 3 touches there. Doesn't really matter whether it's, but the body's obviously more significant than the wicks, but as long as you're pretty consistent. There we are, that'll do for now. And again, another one just at its 20-day moving average now there for the Dow. So one to watch. I say we are currently long the Nikkei from last night. We got in here at 34,800 just before close as we ran to the 20-day moving average, and then we've moved higher today, and we're at 35.31. Again, I actually put a target on there. It's an old, but just shy of the 50-day moving average. But I was inclined not to put a level. I'm just going to let it run. But as you can, if I bring up our Discord discussion here, guys, we want to read trading strategies. Oh, hello, Spectrum. I'll have a look at that in a minute. Been a while since I've done this, but we can't let Stuart get lonely and himself. Thank you very much. This is my take on the Dow Jones. I'll come to that in a minute, Spectrum. Thank you for that. But I just wanted to, this was last night's post. We reversed to our stop losses I've just shown you. So we were up overall on those trades, and overall on the day yesterday, I think we were about 90 points when we, you know, these. So we were. So we were negative and then plus, or net 13 on the whole S&P. We were net 85 on the, so that was the 8, yeah, there we are, 98.5 on the S&P 500 and the Nasdaq yesterday, having had that losing trade and winning trade. So, and then we went long here at 38.8. Yeah, it was only 8, and I haven't seen that last night. Stop loss down there, and I did put a target 36.2250. I was inclined not to, but anyway, I'll have a look at let's have a look what Spectrum's saying about the Dow. I thought it's important to know what time frame this is, Spectrum, my friends. But yeah, 40. That's what's he looking? Is he looking to short this or buy this? I'm not sure what he's saying here. These hourly time frames. Yeah, it's quite a strong move here. 40. Let's see what he's saying. 40, 4,400, 4,400, 4,200. So let's have a quick look at on 44. Yeah, I mean, he's talking about 4,400, isn't he, above here? Yeah, that's exactly sort of you know, there's a big, not big, but there's a, you know, a certain pivot area here at 40,800 Spectrum. If you're still here, you can see that was the upside and turnaround where the 20-day moving average at the time. And if we look to the left, you can see that was a low point from this this big leg, or this last leg down here, had been through there at 4,800. So that's the, you know, that's the key. So we got here, and that's an upside target. So 40,800 to the upside if we can hold the 20-day moving average at the moment. You know, last time we couldn't, we went down, couldn't, and then we declined. But this is a positive rally into it rather than the sideways action going away from it. So this looks quite positive. So it'll be interesting to see where this finishes on an end of day basis. Remember, this is a daily time frame. If we come down to the 4-hour time frame, you see the gap on last night, but you can see this area there. You see that there's that 40,800, and that's also corresponding at 40,900. 100 points on the Dow is not a lot, is it? But 40,900 is the 200 moving average on the 4-hour traders. So there's a clear, you can see the clear resistance there, that 40,800. So we got a top, not really a double top there, but we did decline from it because it's they're quite close. But yeah, that's not. There was a, you know, I hate these sort of bounce rallies, V-shaped rallies, but there's a, you know, clearly buyers down here. You see here on the 4-hour on the Dow. Remember, this is our daily trend line we put on earlier. So yeah, 40,800 I would say was the upside key resistance area, but your 40,700 there, you can see that pull that down in the 4-hour time frame. So here you can see for 4-hour traders, this open bid on the opening trades today has held over the 50 period, the blue line here, and the 20 is moving here. So we got 20 and 5 and 9, so nicely trending high up. So we're out with stock. We'd like to see the 20 come up here and cross this flat moving 50. So if we can hold this where our stop loss will, where we closed our trade yesterday at 39,600, you know, we can have a go at that 200 hour moving average. So that's my take on that Spectrum. So yeah, it's excuse me, it's positive. Oh, didn't mean to do that, didn't I? It's yeah, it's positive. You got it 40,400 and 40,200 for your grey areas. I don't know if you're looking to short that there or what you're saying, but that's been a very sort of a, you know, Adam and Eve type sort of bounce, V-shaped bounce here on the Dow, and obviously all the other markets. But you know, we could easily flip the other way with some comments back against Trump, but you know, he's cooling his rhetoric as he's been the realities of the market certainly having a dawning on our friend in the White House. Where's my chart gone? I've lost my chart now. Oh, did I come out of it? Anyway, let's wrap this up. I've been here best part of 45 minutes again now. I always talk too much, don't I? Yes, says everybody, especially my wife. So yeah, some mixed data. Well, in summary, basically, we had very mixed, poor, in fact, data out of Europe and the UK this morning from the PMIs. The US data was a bit mixed, but also quite weak. That the number of note I'm taking from today's PMIs is that big decline in services PMIs, a move of 4 full points from 54.4, healthily above the expansion into the expansion area. And it was upgraded from last month, only by 1 tick, but down to 51.4 for the first reading. So that's a bit weaker. However, home sales have helped perk things up again and weaken the dollar's rally today. Oil inventories in a little over 15 minutes. So we looked at oil earlier, didn't we? I've lost the. Oh, that's because I brought Discord up again, didn't I? So let me just open the charts again. Let's bring up platforms. I say oil was looking to break that 20-day moving average, wasn't it? On the end of day basis. So if we look at the energies and US oil in particular, we can see it was capped. We're going to the daily time rate. We're capped at the 20-day moving average for 3 days, looking quite positive. But we've now turned negative on the day, and actually negative quite significantly since we've been here, haven't we? It's a big down candle on the new home sales data at 3 o'clock there. It was already negative here. Again, if you've been long up to this test of 65, that would have been short this morning at or 12 o'clock short, and back through the fib level, and then back into the 200 hour. So we've now been happy to take profit at that at just above 62, and we've been back to test the next fib level there at 61.8. So it's a key time for oil. Big down day today at the moment. So perhaps that's people in the know front running the inventories. We shall see in 13 minutes. I know I'm not sure many of you trading oil, so I won't waste your time on that. But certainly it's one to trade. It moves around just like any other asset. But let's finish on a positive note. Let's have a look at gold coming down, but still, all-time highs again yesterday, and then turned around. We couldn't hold or get to breach the 3,500 level yesterday, and I know many of you were short this yesterday, so well done. And short again today, down day today. If we look at the 4-hour and the 1-hour charts, so we've rolled over. But it's still bid as far as I'm concerned, but certainly some profit being taken off the chart. Interestingly here, the 4-hour under its 20 and its 50-day period moving average for first time in a long time, and the hourly chart nicely trending from the nice test and rejection of the 3,500 level yesterday, under the 20-hour yesterday afternoon, and under the 50-hour into late trading 6 o'clock yesterday, and continuing to decline on open this morning. Bit of a retrace and down, and the 200-hour has also been tested. So nice move, leg move into a sort of a key sort of pivot area again now at the 200-hour and the 3,290 level, 3,285, where we were here. You can see on the Saudi chart, didn't have any impact really on the way up. And finally, let me leave you with Bitcoin having a ripper of a day. We started with Bitcoin, we finished with Bitcoin. 92,700, 92,000, 93,000 has been given up, 95,000 has been given up while we've been here. So it's rolling over a tad, but the 21-hour moving EMA is holding currently. So don't lose your nerve, but obviously it's a volatile one. You've got to have nerves if you're trading. Billy Bitcoin. Guys, if you're not with us, why not? Do come and join us. Our evaluations, our products are as open and as clear as any prop trade out there. The proptrade.com, the place you need to be. We are here to help you. There's even, I'm saying even. You click on our terms and conditions. They're very clear. They're very simple English. Whether you're a one-phase trader or a two-step trader, we're here to help you. Lots of discounts on the prices. So our most popular still remains the 25,000. SC25 is still valid for new traders. So that gets you a 25% discount on your initial challenge price, which you get back once you become a funded trader anyway. So $44 or $43.75 is available on the 25,000. If you've got 50,000, you save an massive $86. Brings it just over $250 to give you £50,000 of equity to trade with, to play with, to apply your strategies. Good risk management is all about, keeps you in business, my friends. Two-step challenge, 8% profit target on phase 1, 5% on phase 2. The fee gets refunded when you get your funded account. You get paid weekly, 5 days thereafter, 80% profit share on standard accounts, 90% on some of the pro accounts. So check us out, guys. We're as good, if not better, than most prop trades out there, and we're run by grown-ups. Me being the most grown-up with them all, age-wise, not necessarily character or ability-wise. But anyway, take care. See you all tomorrow, and may the pips be with you as ever, my friends. All the best. See you soon. Bye-bye.